One is those guys are profitable.
Yeah, great, huh?
I mean, I remember my old Rocket days where, profitability was something that you either move as a North Star or you just try to avoid at all costs, right? And it depending on the flavor of the month at senior leadership, right? So.
This episode was recorded in Sadu Capital's office in Riyadh. Hi, everyone, and welcome to a new episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, VCs, and investment rounds. Let's jump right into it with our amazing guests for today. Hasan Haider, founder and managing partner at Plus VC, Laith Kassis, the OG of the startup ecosystem in Palestine, Romain, Assunção, managing partner at Antler, and my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to the company's websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Before we start talking about the news of the week, I want to tell you about OCTA, our new sponsor. OCTA is an AI-powered workflow automation platform that helps modern businesses collect payments faster, smarter, and without the back and forth. If you're a founder or a finance leader, you know that managing receivables requires 14 hours plus every single week. It's chasing corrections, negotiating payment terms, updating invoice details, and constantly following up with your clients.
OCTA automates the entire process, handling everything from invoice disputes to payment confirmations, so your team can focus on growth, not admin work. That's why more than 100 companies like Careem, Lean Technologies, and Algram trust OCTA to streamline accounts receivable. Check out OCTA at weareocta.com, that's weareocta.com, and experience the modern way to manage receivables.
Welcome to the show, Laith and Romain, for the first time, and welcome back, Hasan.
Hey, great to see you.
Thanks, Ahmad. Thanks for having us.
Jamie, you have a lot today. What do you want to start with?
Yeah, there is a lot to get through. I guess maybe if we start at a high level, I think I don't need to set the scene too much as it pertains to Stargate and that partnership that was announced last week in the UAE. Look, I'd be keen to hear people's thoughts on this because, look, I think it's interesting that it follows obviously in the wake of Humane and that sort of sovereignty play that is very much what Saudi seems to be doubling down on. I think it's interesting that we see, obviously we have Falcon as well in the UAE context, but this partnership as well, which I think is telling. Any reactions to this other than the fact that it's great that we're going to get ChatGPT Plus for free, which I'm looking forward to. It's one subscription I can.
I don't think that's
take off.
actually the real news, by the way. I think that was.
We live in hope. We live in
someone-
hope, Hasan.
Someone I think debunked that as an Instagram sort of news, so I don't think that's really happening. I think it's really cool to see that the governments are really active in the region, investing in technology, which is really nice to see. You know, a few years ago, this wasn't gonna happen. You know, when things were happening in other things like cloud or whatever, our region's governments weren't really focused on the future technology. So this is really cool. I think this is a great development. I'm just, a bit sad because it would really be useful to have more of that funding invested locally into startups in our region. Just, that's my personal bias because I could use some of that funding as well. But I think it's okay. I think it structures us as a region at the forefront of this next phase of technology as AI, which is pretty cool.
I think it is cool. I mean, governments in GCC are now viewing AI data centers like Stargate as critical national infrastructure. That can attract global AI players like ChatGPT and the like to anchor domestically, right? But I think there's a compute capacity to have the clouds on a national level and reduce reliance on foreign clouds, it seems. But an equal or probably a similar initiative in Saudi Arabia with Humane, to what you've said, Hasan, they're also launching a multi-billion-dollar VC fund to also start investing in startups that can take advantage of such infrastructure that are now we're seeing more of it in the region. And I think it's a clever move, in my perspective, from governments in GCC to start developing these private public partnerships in collaboration with multinationals and start attracting some of these AI initiatives on local turf and home turf. I think there's a lot of knowledge transfer that can be done on local grounds, but I think it will also be conducive towards more innovation in the region. But my worry, like you were worried a bit about local innovation and investing in local, but my worry is, how would you compete with lower cost models of AI that we start seeing coming out of India, for example, like DeepSeek and the like, and how that can compete with the current, what we hear about the current business models that the GCC governments are attracting is like huge initiatives with big loads of money. And we're seeing, parallel initiatives elsewhere globally that can come in with much lower cost structures. And this is where we should start comparing parallels, what can be done with these infrastructure moving forward.
Yeah, last week and the week before, we were talking about G42 and Humane in Saudi and in the UAE, and they're both spending so much money on these models, and they're buying services from Grok and now from OpenAI. Roman, what do you think about this new initiative by OpenAI? AI for countries. It's a B2C company and B2B company, and now they're offering to countries.
Yeah, I'm actually very excited, and for a few reasons. One of them is that the fact that the first is happening in UAE, I think is pretty bold and says something about where we are, but also not as a big surprise because MGX was actually one of the initial funding equity partner back in Jan. I mean, if you think about the big plays in the region, you mentioned Saudi, and we're discussing UAE now. In the past years, a lot of things have happened. Right? I mean, they beefed up the full research in academia with the TII and MBZ University of AI of the world. There's a big regulation governance with the UAE Council for AI. There's a lot of work that has been done with investment in MGX, which is basically all across the value chain. And now we have compute, which, by the way, there's not much that you can do without compute, right? And you do that in a world which is at scale with top-notch things, with probably some of the best tech companies in the world. So I'm actually very excited. I'm very keen to see a few things. One is how that is going to work out as a cluster across all the different people that I mentioned earlier. Second is, what do we think will be the impact on talent? Because it's sending a signal to the world, and UAE today is bringing a lot of really strong talent. I mean, just look at the profile at the MGX, at the AI71 now, just like top-notch people. And I'm really keen to see how that's going to amplify even more that shift. And the second is that given the amount of compute, we actually can come up and say, well, from the UAE, you will have the compute as a service for a lot of different countries around. And I understand that the radius will be 2,000 miles or 3,000 kilometers away. That's a lot of people that you can touch, right? So I'm very keen to see that. I think it sends a strong signal. It's the beginning. As Hasan mentioned, I wouldn't mind having funding moving from very heavy hitters to more of the earlier stage, but I'm pretty sure that's coming.
On that funding, what do you think about Humane Ventures? Obviously announced yesterday 10 billion to invest in AI globally. Do we think this is going to go to, is this in the infrastructure layer? Like, is this applications?
I think that's just going to go to like one company and then they're done. Like, that's pretty much
I hope not. I hope not, because we're talking about Builder.ai in a second.
It kind of does seem like that, to agree with Hasan.
I feel like all of these deals that are $1 billion plus are all going to go to like
super concentrated.
Go into Grok or whatever, or OpenAI, and then that's it. Like, we're not going to see any of it. It would be nice, like, if it's $10 billion, if they put aside 1% of that for the region, that'd be pretty cool. If they put aside 10% of that, that's that's the half of the entire funding that happened in the region last year.
But you know what? I think this is the opportunity. If the region misses on developing an ecosystem for AI industry, we're missing the point. Now we're investing heavily in having this infrastructure. So that's one component of this ecosystem. But you have to throw in some capital and invest in local grounds and local innovations, even at a 1% or a fraction of what we're hearing in the news. But that's also, again, part of developing a local or regional AI ecosystem. I think governments have a vested interest in that.
The
But it's
problem
not
is
just
that
this, but it's the linkages. I mean, for the first time, we're having these types of linkages between our region and the global multinationals and all these big initiatives. It may be good, it may be bad, but there has to be a vision there that we take this as an opportunity to introduce an AI ecosystem in the region. But the last component of it is the people. And I think Romain has alluded to it. It's not just, I wouldn't just want to say it's an opportunity to attract the brightest minds to come to this region, but it's also an opportunity where we can also develop the local talent to be more immersed and involved in this AI ecosystem. I think out of China, out of India, you're having alternative, much lower cost structures models for AI, right? And this is my risk. This is what I see as a risk factor. You're throwing and pumping billions of dollars, like you said, Ahmed, into this, right? But alternatively, you have Chinese and Indian models that are coming at a fraction of the cost, right?
So I
Yeah.
really appreciate your point on creating the linkages, knowledge transfer, training the talents here. But at the same time, we're seeing some investments in companies that we don't see any partnerships, any knowledge transfer. And Jamie, please take it away and tell us about Builder and what's happening to that investment.
Yeah, one of our first maybe high-profile massive AI blow-ups. I'm sure it won't be the last over the next couple of years. I've very little doubt about that.
These will be the norm. These will be the norm, Jamie.
Yeah, look, as is the case.
Yeah,
Look, I think that's
like
to be expected on one level.
Remember the e-commerce bubble back in the day?
Personally, I don't, but
Okay.
I've been told I've been told about it. I've been told about it in stories.
Fair enough.
Laith. So
Okay, Jamie, we know you're young. Okay, Jamie.
I've read about it in history books, but no, I wasn't there myself. But no,
Oh my
History
goodness!
books.
It tells you
Okay,
how old.
Jamie,
It tells
that's
you how old we are.
I
It tells
think
you
you
how
need to
old
step
Hasan
back a
and
little
I or
bit there.
Romain are. Okay, fair enough.
So for context on this, was a $1 billion AI unicorn, UK based. It's filed for bankruptcy. Investors have managed to claw back about $37 million from its accounts as well, which left it with about $5 million in cash. Look, there's been internal convulsions really, I think, over the last kind of 2 to 3 months. Their CEO was replaced in March, and I think they've effectively been operating with $0 in UK and US accounts, and couldn't kind of recover from prior mismanagement. Big backers, Qatar Investment Authority being one of those. I think they led the last round, I believe, and you have Microsoft and SoftBank on the cap table as well. They raised over $450 million, and the idea was to, what's the phrase? Make app creation as easy as ordering a pizza. That hasn't panned out.
It's easy to blame the previous management, but what do you think?
No, it's
went wrong in
definitely
Builder?
the blame should be on the previous management. Like I've been reading quite a lot about this. This is pretty clear fraud. Like they pretended to be something for investors and they weren't that at all. They weren't using AI. They were using 2,000 employees and 150 agencies to make those apps. So they were selling themselves as an AI scalable business, but it was just a big app development house like anyone else. So that was, number one, which came out of all this was like what they were selling was complete crap and that wasn't real. And then the second part of it that was really quite astounding that no one caught it was that their revenues were misstated by 3x. I think they stated their revenues were 160 million and they actually only made like 55 million. Like $55 million in revenues is not bad. It's pretty good, but like, it's not $165 million in revenue. So I think it's clear fraud, right? And I think we're going to keep seeing situations and stories like this. It's just part of the ecosystem that we're in, which is unfortunate because it sort of sets a lot of people back. Like I think QIA will double think twice before doing any other direct deals for a while. But they shouldn't. Like it's not the norm. There's a lot of great opportunities out there. So yeah, I think fraud probably what happened, and definitely the management's issue. So let's not do that, guys. Like all the founders listening, please don't take lessons from that. As you know, we should do that until we're caught. No, like just don't do stuff like that.
A lot of VCs say, hey, you're selling the vision and you can't fake it until you make it.
No,
We've
don't
seen
fake
that.
it till you make it. That's bullshit.
Okay. What
All
do you
right.
think, Romain?
Maybe a few things, right? One is, I think it's a good reminder that it's a people business and it's about trust and integrity. And when you just derail from that, just doesn't fly, right? The second is, the question is not whether you're going to be caught, but when you're going to be caught. So I think then your comment, Ahmad and Hasan, were kind of alluding towards what's the difference between the optimism of a founder and pure fraud. It seems in this case that the line is kind of clear. And honestly, I was a bit biased on that because as a non-tech background guy, I kind of liked the vision, you know, I think it solved a lot of different problems. The question for me was, when you have a discrepancy between your vision and what you execute, then it's just, again, I mean, that doesn't fly, right? And I think there is a few things which, in my case, I was a bit reflecting and almost reflecting that as a region, which is, if we look at all the different portfolio companies and what's happening in the market today, I was asking myself, but do we have in place all the right guardrails to make sure that that doesn't happen? Whether this is governments, whether this is talent, you know, how do you make sure that you actually bring people who foster that integrity and kind of obligation to dissent? And I mean, in a place where you have more than 700 people working, I mean, you probably expect some people to actually just raise the voice and say, hey, that's absolutely not what we've been saying externally. The second thing for me was around, you know, when you try to just run before walking, it's a bit tricky. So that element of when exactly you're ready to scale was also important, right? And I think it's a bit of a reflection when you get a lot of pressure as a founder to say, but move fast and scale, etc. But yeah, but at some point, if you do so with an execution which is somehow not supporting your vision, and at the same time operations that are not really backing what you promise to the world, then it's a bit shaky, right?
True.
And the last one for me was, look, man, the financial. I was curious, like how many of the financial model I've seen will actually pass the financial test, and you know, and I think there is a big difference on when you're super early in the game to when you have raised $450 million. But that full optimism versus misrepresentation was definitely in my mind. So biased because I love what the guy's vision was, but I think it's a really good way to remind ourselves what are just the fundamentals of a business and make sure that you go back to basics.
So what do you think of Lovable, Cursor, and Replit? Are they going to succeed given what happened to Builder, or they're not doing what Builder did, like Hasan said? They faked it. They hired 2,000 people behind the scenes to do the code.
This is my take. You know, this is why it matters what happened to Builder, whether it's going to be applicable to the remainders or not. I think the collapse here highlights governance and due diligence challenges for fast-growing AI startups, reminding investors and everyone that scale, as Romain said, has to be balanced with sustainable financial controls. And I think Hasan also alluded to that, right? So you have to have good practices of how to do your financial controls and robust financial auditing, so you can be transparent enough that, you know, you are at a healthy stage of your growth and scaling. And if it's not augmented with proper governance on the startup side, I mean, then fraud starts. You know, I think founders sometimes find themselves in a dilemma, in a catch-22. I feel that in one dimension, they have to report good numbers and KPIs to their investors, right?
They don't. We're fine seeing the real numbers. Don't ever report fake numbers. Like that's not.
Maybe I hear you, Hasan, but maybe in other cultures of the other investors, it may be a different ballgame. I mean, I'm not sure. Maybe this is what really pushes in some of these founders to reporting. Or I don't know. It could be this illusion that this is the sort of culture that there's an inertia that we need to continue reporting good KPIs and numbers and healthy scalability and growth. But this is where the lack of robust financial auditing and control has to be in place. And this is where the proper governance has to be also introduced, which I think the industry itself has to start considering, because we do. I mean, when I remember the e-commerce bubble, what really happened is many of these business models collapsed, and really many of these, just the top, and only the good ones remained. Correct? And maybe this is a
it's a
similar
cycle
wave.
that keeps repeating.
Right. It may be just another wave of new disruptive technologies that are going through. If we learn from anything from history, it's like, have we not learned that how much important, this is my take on things, to highlight governance and proper due diligence and introducing robust financial auditing and financial controls and revenue recognition practices? I mean, otherwise it seems like we're a new wave of repeating the similar cycle of what took place back in the day, but with a new disruptive technology. That's my take on things, Ahmed.
Yeah, we've seen that in the internet bubble. We've seen that in the crypto bubble or blockchain bubble.
I wouldn't mind
that happened, and now with AI. Roman?
Laith, I wouldn't mind building on a few points that you mentioned,
Please.
and somehow alluding to what Hasan was mentioning. I think anything related to actual numbers, there's no freaking way that you can kind of misrepresent that, right? That's just a no-go. I think the question for me is on anything which is related to your projection, in particular in the current world where AI is just getting a bit out of hands, and it's extremely difficult to get a clear view of what's going to happen next.
I think the business model, how to generate revenue streams and pricing for AI business models is still work in progress in a way, in terms of monetized tokenization and pay as you go, or whether it's AI as a service, or whether charging money for AI is it agents charging agents. So I think this is still work in progress in a way. It hasn't, the dust hasn't settled yet on how we're projecting and how we are going to generate revenues and charge for them. And that could be also part of what we're living in terms of history, right?
And I think you mentioned Lovable, which is a Antler company. I mean, you talked about revenue. I mean, I think this is one of the fastest revenue company in Europe. It was like 17 million AR in 3 months. They delivered 2 million revenue per week. You have businesses that actually have very strong model that foster revenue. But for me, the bigger point is, how do you ensure that we actually have a clue on what we invest in particular on the tech side? And when you just need to blow the AI bubble, I think it's important to double click into the tech and understanding what exactly is the level of sophistication which is happening versus what it is claimed. And Hasan, when you said, look, they said it was full AI, but actually you have a bunch of product manager or project manager working on the side. I mean, that's kind of something that normally is flagged in the tech DD, right? So probably a good opportunity for us to reflect as well. In a moment where AI is getting very frenzy, how do we ensure that we double click on the basics and actually look at the engine itself and how sophisticated it is, right?
Okay, Jamie, move us to another side of the world now. You have news about Iraq.
Yeah, exactly. I want to focus on here for a bit, and I suppose the momentum maybe that we're seeing in the Iraqi startup ecosystem. And look, I think it's something ultimately that's been a while in the making. It would be remiss to suggest that it's, it's just, we've had obviously Lazoo were the first YC-backed company out of Iraq back in 2019. You've Bali, you've Toters obviously entered the country as well. So look, you're starting to see companies who are raising more sizable rounds. Look, for the most part, I think up to recently, it's largely concentrated in sort of food delivery or mobility plays for the most part, but think you're starting to see that change. You've obviously a plus VC portfolio company this week. On the e-commerce side of things, you've like the fintech, you've something like Whale, EQIQ portfolio company, or something like Sima as well. So look, let's maybe look at both of those announcements briefly and then maybe chat through it. The first, obviously, EQIQ, Abu Dhabi-based VC fund, but Iraq focused. It's a venture builder as well, I suppose, in many respects. It's pretty hands-on from what it seems. So they're doubling their fund size from 15 to $30 million, funded by Mohammed Al-Hakim, ex-Careem, Iraq, and Jordan. 3 of its portfolio companies to date, I think they've deployed something like 8.5 million. 3 of those companies were co-built internally. I mentioned one of them was Whale, focused on fintech, and then you've Foresee, they're kind of an interesting ed tech based out of Finland, actually. And so that's EQIQ. And then obviously Toolmart. And look, I'm keen to defer to Hasan to a certain extent on this one, but Baghdad-based B2B procurement startup solving, I suppose, an overlooked problem, how enterprises source about 80% of the items to make up only 20% of spend, led by, as I mentioned, Plushie, Oasis 500. I'm keen to maybe start with yourself, Hasan. It's the first bet plus VC I've made in Iraq. Like, what was this the result of? Is this like a founder led, or is it based on the fact that I know you mentioned that they're keen to expand, I think, into the wider MENA region as well? Like, typically Iraq's seen as a local market only kind of play, regulatory complexity and capital scarcity. So what convinced you, Toolmart?
Honestly, our whole thesis is we're investing in great founders that can execute and get things done, and the team there have been phenomenal. Like, they've built a profitable business, growing really well. It's just phenomenal what they've done in a difficult market like Iraq. There isn't a competitor that's doing something similar across the MENA region, so they have a little bit of a room to grow into other markets as well, which is excellent. They've already started serving clients in other markets a little bit, just as experiments. So yeah, we invested in a great team that's built a great company at a great valuation and that has the potential to grow outside of the local Iraqi market. We did look at Iraq quite in a lot of detail, and Iraq is probably a little behind the rest of the ecosystem in terms of where it is in development. So most of the ecosystems in the MENA region started off with e-commerce and buying stuff online, and so that we've all moved past that, and now we're in like transactions taking place online and fintech and things like that, and enterprise SaaS is also playing quite a large role in the rest of the ecosystem. Iraq is probably still at phase 1 of that, so they're moving from what do we use the internet for? Let's buy stuff online, and then let's pay for stuff online, and then let's use it for everything that we could possibly use. So that's kind of my thesis on the development of most ecosystems in the region. I think Iraq is at that stage. Morocco is kind of in that stage. The rest of the region is probably a bit further ahead down that path.
So let me stay with you. How about Syria? Syria is coming up now. And I've
I
seen
mean,
2 announcements about VC funds in Syria targeting Syria
yeah,
founders.
look, our thesis in life is we invest in the MENA region except if there's an active war taking place. So for us, Iraq didn't have an active war, but Syria did, Libya does, Yemen does. So, we can't really invest where there's a war taking place. Now that Syria is no longer under that sort of situation, I think we just have to wait and see. I think the region is still politics is unstable and stuff. We will probably at some point look at that market as well. There's always opportunities when a new market opens.
In those underdeveloped markets, compared to the other MENA region countries, like in Iraq, Syria, and some others, does it make more sense to be a venture builder than a traditional VC or a typical VC firm?
No, because I don't think you're investing in the right thing. The problem with these nascent ecosystems, the moment you go in as a venture builder, you're teaching them the wrong lessons. You're teaching them that, hey, listen, we'll do a lot of the hard work and you just have to like do the fun stuff that you want to do. But that's not really what being an entrepreneur is. And if you go into a market with that thesis initially, you kind of are setting the wrong tone for what entrepreneurship and what being a founder is. I've seen so many of these venture builders in emerging markets sort of just fall flat on their feet because they're not they're not recruiting the right kind of founders. You're looking for people that can really execute and get things done by themselves. Like you need these strong personalities that are going to be able to build something in a difficult market. And venture builders don't attract that kind of personality because, there's always a clash between the guys who think they know what they're doing, which is the venture builder, versus the founders that are actually probably know what they're doing. So I don't think that model is really the best model for emerging markets. I think what you'll see angel investments, small amounts of cash, couple $100,000 rounds, start that ecosystem, and then it'll grow from there. But maybe Antler can do some cool stuff as well. Romain, how about you?
So I'm not sure about what's the model, but I'm pretty sure that you need to make sure you have great founders who get things done and know the market extremely well and have sufficient skin in the game that they can go to the next 5 to 10 years of hustle because it's just tough, right? And I think there's a few people who have done that successfully in Iraq. I mean, you have the folks from Bali and Hasan on your investment first. Congrats. Second, I was very interested when I look at the press release and interested in a few things. One is those guys are profitable.
Yep. Great, huh?
I mean, I remember my old Rocket days where, profitability was something that you either move as a North Star or you just try to avoid at all costs, right? And it depending on the flavor of the month at senior leadership, right? So, and I was honestly fairly impressed in a market which is probably extremely tough, super fragmented, like your whatever 5,000 GDP per capita, 800 semis and whatnot. I mean, this is tricky, right? So well done to the team first. I think that's something we should be celebrating. Now I'm very curious about the market, which is a market I don't know extremely well, but I'm actually very interested in. You mentioned e-commerce, Hasan. I'm actually super interested into financial services in a place where you have 10% digital payment and most of it is in cash. Well, like where you have big moves at the regulation level, I mean, what's going to happen, right? And that's something I would love to see much more. So founders, please, feel free to connect. The second thing for me is still something I would love to double click on is what's happening after you invest in Iraq. Who is the next people in line who will follow the check? What exactly is going to happen post Iraq? Which are the countries that you're going to naturally go to? And at the end, what's the, I'm not talking about exit yet, but what's kind of the end of the funnel, right? And that's something that I would love to definitely understand more. Very excited to see what's happening. I think, again, kudos to the team who have done it. We'd love to double click into how they have done it, but well done.
So in emerging markets like Iraq, Syria, Palestine, Laith as well, what should founders focus on right now?
Execute and get things done, like whatever it is. Find a gap that they can solve and then execute on that. The advice for those markets is different than the bigger markets. It's just really find real problems that you can solve, either by serving bigger markets from your small market, which could be like a pricing arbitrage, or find something that Iraq is a big enough market, Morocco is a big enough market that you could build really large companies just there.
True, I agree. But in other geographic areas in MENA region, you as a startup, I think you have to be born regional from day one, because you do have a very limited local market to begin with. But if we step one step back, I think when it comes to MENA region, Ahmad, I always felt that you cannot look at ecosystems on a country based. I mean, you have to look at this region on a holistic approach. On one hand, you have talent-rich resource countries. They may be within these countries, they may have large sizable markets like Iraq, they may not. But in other parts of the MENA region, you have sovereign funds and wealth in terms of cash-rich resource countries. But if you put these in a blender together, I think you come up with good recipe of deal flow. And I think what is happening now in Iraq with this specific case, that it can drive and deepen local deal flow that will come out of Iraq. As you have one benchmark, you have one success story, you have an example now that the local entrepreneurial community can start looking and seeing, and it can surface additional entrepreneurs that have ideas and have entrepreneurial zeal and want to practice entrepreneurship, right? So in the absence of funding and proper mechanism of funding, equity types of financing that have, caliber GP behind it that understands where this thing can go next and which markets it can penetrate and can provide excellent and sound mentoring advice and have, this can drive additional innovation that can come out of markets like Palestine, Jordan, Syria, Iraq, and war-torn or previously war-torn countries, conflict areas, right?
This sounds great, Laith, but how can those founders attract investors? Like we've seen Hasan has done his first investment in Iraq.
Yes.
Now, after so many years of the war ended, Palestine is still not stable, Syria is still not stable, Libya is not stable at all. What should happen in those markets for VCs and angel investors to start investing?
Great questions. From my point of view, you can address this from a multiple layer, a macro, meso, and a micro. On a micro level, it's up to the founders and entrepreneurs to do their due diligence and align. I mean, I came up with a concept, I called it MVI, minimum viable investors, in parallel to minimum viable product or minimum viable segment. But they have to do their own due diligence of understanding who is in the region as an investor that is closer to them in terms of interest in what they're doing in terms of a business model. So on a micro level, the startups, the founders coming up from these regions have to approach and start pitching and communicating to and understand who's who in the region in terms of, who's the Romain and the Hasan Haider of the world, right? Regionally. So that's on a micro level. But on a meso level, I mean, ecosystems and champions in ecosystems also have to talk to each other, right? So incubation, acceleration programs, this community has a vested interest to know each other and communicate and collaborate. But on a macro level, you can discuss things on a government-to-government basis. I mean, just yesterday, as an example, there was an agreement between the Palestinian Ministry of Labor and the government of Qatar of starting to exchange labor or start exchanging entrepreneurs. So you can address it from as a policy level, even when politics settles down in the region. Now we can see Syria sanctions have been lifted, and that announcement took place from Riyadh, right? So new dynamics, new preparation of what can be done in the innovation ecosystem in Syria is now under preparation and under planning. The countries like Emirates, Qatar, and Saudi Arabia are all designing things. What sort of interventions can be done with the Syrian, and we go back to the macro. So that's a macro way of coordinating things on a government-to-government level. But many other things can be done on an ecosystem-to-ecosystem level, but there's a responsibility on founders to also know who's who in terms of who's investing to a similar business model to they are and approach them.
I mean, your question is basically how to unlock more investors in Iraq or Syria. I mean, and I would say it depends on the type of investors you're talking about, right? I think as an investor sitting in Saudi or UAE, the alternatives that I have are alternatives that I sometimes understand better, where I can DD much more, and with a level of stability that could be higher than what I see of some of the decks that I receive in Iraq. So I would say probably one is we need to think about that as, but what exactly are the alternatives? And my ultimate goal is to return as much financial performance to my LP as possible. And that's not going to change. And hence, to make sure that I invest not in what I know, then it will mean that I need to be demonstrated that actually what they're building makes sense. And I'm back to, someone on the call was mentioning it starts with great founders with a great problem and actually able to execute it really well, right? But if you demonstrate that your return profile could make sense, maybe with the burden of proof, which is much higher because of a need for education for investors, could be, right? I think it's probably important. And a way to signal that is probably what is the level of activity from local investors and not just international investors. Because at some point, I mean, as a local investors would know much better the market and the opportunities and actually the people, what is the signal that you want to send? And I think at some point you need a bit of skin in the game. And as a And that's important to have that demonstrated if you want to kick it off, right?
Okay, we have 2 more stories to go. Now back to Dubai. What's happening in Dubai, Jamie?
Yeah, let's talk fractional real estate and tokenization. 2 of my favorite subjects. Married together on this occasion. Very exciting. Yes, we have Pripco, Dubai-based prop tech founded by Amira Sajwani. Note where the daughter of Damak chairman Hussein, who the billionaire spent a lot of time in Mar-a-Lago in January and is reportedly investing $20 billion in US data centers as well. So all very exciting. But in any case, Pripco, they've launched their first ever pilot enabling UAE residents to invest in tokenized real estate. It's been approved by DLD, the Virtual Assets Regulatory Authority as well, allows Emirates ID holders to co-invest in fractional property ownership. And unlike stake, this is via the blockchain. So the minimum ticket size is 2,000 dirham, projected returns of 8 to 12% annually from rental income and capital appreciation, built on Ripple. The tokens are fiat only, no crypto, tradable via the Pripco Mint wallet. 2,400 investors have registered to participate. And look, it looks promising when you look at the fees. It's kind of, you kind of do a small bit of a double take. You have a 2% fee in investment, 1% exit fee, 0.5% annual management fee, capital appreciation fee of up to 15%. And a 2% DLD fee. So in total, investors could lose up to 20% of their returns to fees, which is, that's pretty stark.
It's too much, honestly. Yeah, that attracted my attention. It's really too much.
It's pretty damn high.
Yeah.
Look, they've raised $10 million. It was a seed round back, I think it was late last year, that was led by Sharouk. I don't know, if we start things bluntly, like, is this tokenization policy, is this genuine innovation, or is this just a regulatory marketing exercise?
What's the advantage of tokenization, real world asset tokenization? What's the real advantage? Is it the liquidity? And if it's that, does it justify those really high fees?
Actually, on liquidity as well, noteworthy, there's no secondary market. So you can't actually, at the moment,
there's no.
Unlike,
okay,
no.
So what's the point?
Yeah, unlike stake, which obviously introduced secondary market, and was it last year as well? Obviously, they have that, but yeah, there's none to date.
Honestly, I think it's great that startups are innovating still in the blockchain stuff, but like I don't see the need for blockchain in many of the use cases that they put blockchain in it. Like it's like you're kind of trying to fit something, a square peg into a round hole. It doesn't really need it. The benefits of building stuff on blockchain are usually the opposite of all of this, greater liquidity and lower cost, but that doesn't seem to be the case here. I think it's cool. It's a nice use of technology, I guess. If they were going to launch something similar to stake, I guess they needed something to differentiate it from stake, since stake has done quite a good job at building that brand and around the fractional ownership stuff. So it might be a marketing sort of benefit to them, but honestly, I don't see the point.
Yeah, I'm a bit more positive. I would say I'm cautiously positive. I mean, one, I think it's pretty cool that you have one of the top 4 sectors in UAE being somehow looked at by the regulators, and there is something happening. So I think it sends a good signal. Second is, in theory, and today it's a pilot, it's a one building, it's only Emirates ID holder, it's right. So, but in paper, if you move that at the massive scale, yes, you have liquidity, you have security, you have transparency, you have right. So I think it could do multiple things, and in the world where they want to move from 60 billion 80 to a trillion 80, that could help. How much that could help, I actually don't know. I have a bunch of questions though, right? I think the first one is, who exactly does it target? If you think about the biggest investors today in the Dubai market, you have basically a fifth of Indians who analyze that like tokenization is not exactly the most suited in India, for instance, right? So you have British, so is it to convert a bunch of like people who normally would have not invested into being investors? Most likely that's going to be the case, right? And if so, how do you ensure that actually they are informed? Because the specificity of that tokenization is that you actually invest and own a fraction of one specific asset, which is extremely different as a risk profile. And when you say, I own a REIT, or I have a portfolio of assets, etc. So one is, how do you make sure if what you want to target is people who get invested in for the first time, that actually they get informed into what's the underlying asset that they will invest in, right? I think the second is the liquidity is obviously coming with a lot of different assumptions. One of them is that you actually need volume and you need the marketplace to do so, which today doesn't really exist, right? And if you solve 1 and 2, which I think is pretty potentially interesting, the third is to say, how did that work in the current Dubai real estate market, which is very cyclical? We probably lost 30% in value between 2015 and COVID, and then it goes bump again. Now we're a bit in the high side. So everything which you relate as potential returns is basically based on the high side. What's going to happen, right? So when you actually increase liquidity and short-term perspective in the market, which is cyclical, you actually need to make sure that the people who will invest know what's happening, so that they don't freak out in the next few months when the cycle happens. And maybe the last thing is, I'm very curious to know what's going to happen, or what will be the impact on the market overall. Obviously, either it's going to be peanuts and doesn't matter, or it can become very big. If that becomes very big, is that going to actually amplify the cycle much more that it flattened the cycle? So I'm cautiously optimistic. Really would love to see what's going to happen there.
I think with this business model, I think you can do it on a non-blockchain technology platforms, right? So you can democratize real estate investments to a segment of the market, so they can become fractional owners of real estate. It may have been prohibitive for them to come up with the whole lump sum for them to buy it as one unit or one block of land or what have you. So as a business model, I even seen one business model like that coming out of Palestine, right? Now, to me, what is missing is, how much are we taking advantage of blockchain technology in terms of what this technology can provide? And this is what I don't know. Are we using smart contracts? Are we protecting the rights of the smaller investors into this using blockchain and smart contracts? Can they add additional protection to their fractional ownership of this unit? Who owns the right of selling it at what price? So there's a certain return on investment. That is there a limit? Is there like some not less than this that I'm seeking? And who's protecting that? So these are the sort of questions I start dabbling with, and I don't know much about what's going on in terms of what's the value add of introducing this over blockchain versus a traditional technology platform, to be honest. But I think the positive signs of this business model, it does allow an opportunity for new segments that don't have much capital to enter into investing in democratization of the real estate investment. And that's a beautiful thing to have. What we're doing with blockchain is yet to be seen, whether we're taking full advantage of what this technology can provide us as, again, like smart contracts and other protection of investment rights. No clue what's going on there.
Yeah, I love that, Laith. And to add on top of that, the use of blockchain and smart contracts usually is used to decentralize, not to go with the centralized model. But in Dubai, we see that that's being centralized with LDL and VARA trying to regulate this, which is good, but also bad at the same time. I don't know.
So that's again the point. What are we doing with technology? Are we taking full advantage of its capability, or we're just muting it because of regulatory issues and environments? So it defeats the purpose of introducing it to begin with. Maybe.
Well, let's end with a story from Silicon Valley and our founder in there making some waves. Jamie?
Yeah, exactly. So let's finish off with Monarch. Sam France-based personal finance platform, co-founded by Egyptian-born entrepreneur Osman. They've raised a $75 million Series B round, bringing the total valuation to 850 million, so just shy of the unicorn benchmark. Founded back in 2018, designed from day one rather as, I suppose, a subscription-based alternative to add support to personal finance tools like Mint, which has unfortunately fallen by the wayside, or Intuitive reincorporated into another product. They've done something with it, but in any case, its former iteration, it is no longer available. In terms of some background, I suppose, on Ozzy himself, previously head of product engineering at Cora, and he co-founded Parleo, a civic tech startup that was acquired by Cora back in 2016. He also co-founded Akbarak.net as one of Egypt's first Arabic news aggregators that grew to over 10 million users back in the day. And look, as I alluded to there, its growth really accelerated in the wake of Mint shutting down in early 2024. So timing has definitely helped here. And look, obviously, I think the subscription model alternative is quite interesting as well. I think one of the difficult things with tools like this has been monetization and self-sustaining monetization. And look, to this point, I'd be interested to maybe get, Hasan, your perspective. You've invested in something somewhat similar in a regional context in Mine. Not exactly the same, but I suppose they've adopted a similar kind of subscription-based approach to wealth management. There's obviously a budgeting component as well. What are your thoughts on sort of the monetization of tools like this from a business model perspective?
I think there's quite a few ways to monetize stuff like this. So I guess mine is a little different than this. So mine is more like a wealth aggregation tool. So for high net worth, not super high net worth, but people that have different sources of wealth and different pockets and stuff, you want one dashboard that gives you this is everything that you own, right? So that's kind of what mine is doing. And mine added on top of that a whole layer related to basically estate planning services, which is quite an interesting sort of thing. So there's a lot of different ways to monetize these personal finance apps, and each one of them has a different sort of focus, I guess. But subscription is definitely, once you're showing that you have enough value to your customers, they should be willing to pay for it. So subscription has to be one of the ways that a lot of these apps need to look into. Ads suck, so that's not really a good way to sort of monetize. Maybe at the beginning, but it doesn't scale very well for these large apps. I think the best way to do it is subscription plus other little things that can give you fees here and there. So yeah, that's kind of the thesis. Ozzy's done a great job, honestly. I've known him for a few years now since he started Akhbarik and stuff. So the path has been pretty phenomenal to get to where he is.
Yeah. So I used Mint in the US. It was really good, but then I was surprised that they shut it down. I wonder, why would such a big company not pivot? I mean, it was acquired by another company. Why did they shut it down instead of pivoting it, instead of changing the business model? What do you think happened?
Corporate stuff happened usually. When a decision doesn't make sense, it probably happened in a boardroom or a corporate somewhere. So
yeah.
True. Hasan, your insights are just amazing. Yeah, I've seen it myself where like agility of a startup does not necessarily align with corporate structures and decision making inside corporates, for sure.
I'm amazed by the ability of some of the Diaspora founder to actually make it, right? And that somehow brings some questions, which is what would it take for them to come back and build in the region? And how do we help there?
We've invested in a bunch of Diaspora founders, so I can definitely put you in touch with a lot of them. So
I wouldn't mind, and I would love to make sure that we can help sometimes to bring them back in the region. I mean, get in touch with a bunch of high talent density places. The London, New York, San Francisco, Paris of the world. And this is what is in the back of our mind every time, right? I mean, we bring probably about 20% of the diaspora people on every residency which we have. So it's our community-driven due diligence. And the level and the caliber that we see is absolutely fantastic, right? So for me, this is beyond what they build. It triggers a lot of questions, which is, given the amount of knowledge, expertise, experience which have been literally build there. What do we do with that, right? As a region, how do we help uplift and elevate what we believe is important, and what role do we want to play, right?
Roman, here's my dilemma with this. Those really good founders, somehow, they just move to Silicon Valley and raise money from there. And when they start their companies, and I've seen that and I've lived that in Silicon Valley, when those founders start their companies, they try to raise the pre-seed and seed rounds from VCs or angel investors in the MENA region while living in Silicon Valley. And they're faced with this reply: hey, you're in Silicon Valley, why don't you raise from there? If the VCs in there didn't invest with you, why would I? And then in Silicon Valley, when they try to raise money from Silicon Valley VCs or angel investors saying that, hey, I have a background from MENA, they would say, why didn't MENA VCs invest in your company first? Why are you raising from me first now? But eventually, the really good ones who persist and keep going, and they have really good value to offer in solving real problems and focus on the customers, they make it. And we have the examples of Writer AI, Replit AI, and now we have Monarch. Those all kind of skipped VCs from the MENA region. Most of the funding came from US VCs. So I don't know, how can we help those founders while they're still starting?
We invest in them. That's basically it. We give them.
I mean,
Yeah.
I would say maybe a few things, right? One is what you described true today, or was it true before? Second is, what does it take for a founder to get investment? So if you say, I want to build something in the US and I'm just looking for money from the region, then, I mean, you might have questions, right? It's a bit like people who say, well, I'm still full-time employed somewhere, but please give me the money. And if you give me the money, I will just stop what I do and make sure that, you know, I will work on what you pay me today. It just doesn't. So there is a bit of what needs to happen for you to actually raise that money. And the third sometime is you have a level of calibration in particular on valuation, right? I mean, we receive a lot of conversation, which is I'm raising 5 million at 35, whatnot, like based on me and nothing else. So I think there is some element of what does it take also to raise in the region. But in short, I mean, we do pre-seed, seed up to Series A. I'm very happy to speak to any of the founders from the Diaspora who is very interested into coming and building in the region as early as you can. Happy to do so.
But not if they're building in the US, for the US. There has to be some connection to the region, right?
I mean, that's also what I do, right?
Yeah.
It's at some point to help the region grow, right? So, I mean, I'm extremely happy to spend time and share networks on people from the diaspora building in the US, probably starting with the Antler office that we have in San Francisco. But in reality, I do what I do also because I want to have large successes from the region. So that for me is priority number one.
There's a lot of challenge in fundraising, right? The process of fundraising can be challenging. And this is, again, I allude to the concept that I came up with. I called it MVI, Ahmad, similar to the MVP and MVS. If you do your due diligence in who's who and what is the portfolio of investments that GPs are interested in terms of startups, where the alignment can be in terms of what is it that you're pitching and what your business model is, it may happen that your target audience of investors may not be out of MENA. It may be just organically and naturally. They are the ones sitting in Silicon Valley because the market you're addressing is there. They understand it. They see the opportunity the same way you have, like Ozzy. I mean, what Ozzy did here is like he immediately recognized that there's a whole segment here that has been displaced by Mint, and he jumped in and start acquiring them, right, with a new application of fintech, right? So that is an opportunity as an entrepreneur you immediately see, and you pursue it. And when you pitch it to Silicon Valley-based investors, they can align with you on the market sizing and the need and the high pain and all of these things, right? It may not align very well with someone that is sitting in MENA, but it may align with someone as an investor sitting in MENA that can also join you in the round. So, but these are the trials and tribulations of any founder and the challenges that they have to go through, that they need to cast a wider net when out of MENA. It is not as easy. That much we know. It is not an easy process out of MENA for any founder to go out and fundraise. It may not be these days as easy as we would think in the Silicon Valley. I mean, things, there's, different dynamics, competing quality of deal flow that is, like someone like Ozzy is competing with in Silicon Valley, just the same, right? So when you are neck to neck with another quality deal flow that the GP is, doing due diligence on, it becomes a harder pick for them to which one we take. So, but in the MENA region, you probably have a better chance if you're coming up with a quality deal flow. You'll have a probably better chance of acquiring this investment, right? So it all depends, but I think there's a lot of due diligence that the founders have to make, and alignment with these viable investors is the concept that I keep talking about these days. Right? It makes life easier.
Can I pick up actually
Yeah.
on sort of deal flow and sourcing just quickly? And maybe Hasan, I know that you backed Bloompath recently, you're US based, and I only kind of came across the fact that you'd back Hoop as well, which I came across a couple of weeks back. And as an avid, terrible amateur basketball player, it looked super cool. Any tips as far as sourcing is concerned from a Diaspora perspective? Is it all network based? Like, what's discovery look like?
It's relationships and network based, and I think brand does play a role as well, because we are pretty active in the region. So if someone is leaving the region going there, they'll probably still reach out to us as well. But I think the good quality deals that we've seen from Diaspora has been primarily driven by network. And like we invested as well in Genie, which is based in London, but it's the ex-founders of Eventus. We've invested in Viv, which is also one of the US Diaspora deals. So we have invested in quite a few Diaspora deals, and we will continue to do so, I think. It
Hasan,
makes
I'll
sense.
give you the last word on this. What advice do you have to founders who are trying to cross borders?
Oh, cross borders in general, or go from here to Silicon Valley?
Let's say here to Silicon Valley.
Yeah, here to Silicon Valley, I guess, is just you need to go there and just be based there. I mean, there's no half-assing it, right? You've got to actually pick up your bags, move to Silicon Valley, start building your network there, and start like being a Silicon Valley startup. You can't be half here, half there. You can keep your kitchen here, but you as a founder need to be fully wherever you're going to expand into and wherever you're raising from. So it's not easy.
It's not easy. With that, before we wrap up, a big thanks to OCTA for sponsoring today's episode.
Yeah, if you want to
Okta's
get
a great
paid,
company. Okta's great. 'Cause
It is.
I'm an investor, so
I know.
I'll be part of the ad
Hasan,
as well.
if you want to read my part,
No, I'm
Hasan,
fine.
you're
I'm
more than
fine.
welcome to.
Please do,
Okay.
Hasan.
No, I'm good.
You know
I'm
what? That's enough, actually. The investor is promoting them.
Just in case John kills me, I will read the rest of it.
Okay.
I'm obligated to, so I don't breach contract. I will read the remaining copy. Yes, if you want to get paid faster, access financing, and automate your receivable process, head to weareocta.com. That is WEAREOCTA.com, and take control of your accounts receivable today.
Well, with that, thank you so much, Hasan, Laith, and Romain. This has been a great episode. I really enjoyed it, and would love to see you soon.